Let's talk a little bit about Wall Street Bets and how this week they've done a great job of unintentionally showing that free markets don't exist. It's been really interesting, and if you haven't seen it already, definitely check out the video I did breaking down just the general picture of what's been going on, and or definitely go check out Louis Rossman's videos. He's been doing an amazing job covering this, and he's, astronomically bigger of a YouTuber than I am. Definitely check him out. Great content. But what's been happening is that, essentially hedge funds got caught being way too risky, and people decided to exploit it, and it's pretty cool. But what ended up happening is that essentially hedge funds were betting on a stock of GME, which is GameStop, along with a couple others, of going down very aggressively. With GameStop specifically, they were doing it by shorting over 100% of the stocks that were available, which means that essentially the only way that they're going to get money out of it is if it ends up going bankrupt, or in a situation where they drive the price down low enough to then buy shares at a lower price, or some type of fuckery in that way. So very important to understand that the goal was to end up crashing this company. And they were doing it because there weren't regulations on stopping, a hedge fund from shorting over 100% of the stock. And that's a really big issue that, I think most people have come away saying like, well, why wasn't there some type of regulation to prevent this? Right. And there's been two different sides of the coin. There's been people that say that, and then there have been people that say on the hedge fund side that are like, oh, well, these people on Reddit are doing, more manipulation of prices, and that this is a problem. And there needs to be, some type of regulation there. So we're going to cover those different topics and what the reactions have been. So like I said, Wall Street Bets online forum that essentially figured this out and decided to exploit it, and because they understand how supply and demand works. And so they were like, well, we're going to cash in on this because these people are going to get stuck holding the bag since they have this ridiculously high risk short position. And what ends up happening is that hedge funds and brokers, depending on how much of the relationships between them you believe in, and I'll put some links in the description for that, but brokers halted trading on these stocks whenever they started continuously going up, which, as a stock continuously going up, it essentially screws over the people that are shorting the stock and makes them pay out, up to infinite payouts. So they halted trading on these, and on specific apps, Robinhood, Webull, and a couple others, but most notably Robinhood, they put out a scenario where you could not buy any new shares. You could only sell or hold your shares, which of course is going to drive the price down somewhat because people are going to have a little bit of a panic. And this is a pretty big problem. And I think collectively the entire internet, entire world said this is absolute horseshit and something needs to be done about it. So much so that people like Dave Portnoy were pointing out on Twitter that, you have scenarios like this where, AOC and Donald Trump Jr. both agree that this is a really problem. And yeah, if that's happening, hey, you messed up. So this has been a really big issue, and it's something that, I think we need to look at and understand what's happening. Often in the last year, especially from Portnoy, the story has been, it's the suits, right? It's the people in Wall Street that are against the common person. And, that's the whole deal. But I think it's really important to understand that realistically, the bigger issue we have to understand here is that this kind of exposes that the idea of a free market doesn't work, nor can it exist. It's a contradictory belief, right? Because in order to solve this problem, right, you would need regulation on the front end to prevent companies from overshorting a stock, right? i.e. government intervention in the market, right? Government, New York Stock Exchange, some type of body interfering with the market. right? And then, even though there wasn't government regulation in the market, these owners of capital, these hedge fund managers, these brokers have decided, or suits, if you're Dave Portnoy, decided to interfere with the market and prevent people from continuing to buy a stock that they wanted to buy. So whether it's government or whether it's capitalists, right, interfering in the market, someone will. People that have assets will do what is necessary and intervene when necessary in order to protect their profits. That's literally what's incentivized within a capitalist mode of production. So that's the thing you have to really take away from this, because I saw a lot of people say like, oh, they're attacking the free market by not allowing people to trade. We're talking about Robinhood, which that's true. That is 100% true. But again, we have to understand that this is not surprising, right? Like, it's wrong. And I hope that, they see a ton of litigation from this on top of the class action that they've already had, because it's wrong. However, this is a feature. This is not a coincidence. This is not something that, is randomly occurring. This is what people that have money will always. If I have an asset and I am incentivized to make sure that that asset stays at an elevated value, I will intervene whenever possible, however possible. That is what they're doing. And I think it's beautiful. I think this is a great opportunity for people to look at this and understand that material consequences will always take precedence over idealism, like believing that a free market is good. Whether you personally think that a free market would be optimal as far as from a consumer perspective, this shows that that is an idealistic viewpoint, that this is not something that is based in material reality, and that there is no such thing. Because the reality is that if people have different, have different amounts of influence, whether that be governmental influence, i.e. political influence, or economic influence, i.e. owning of capital, within a market-based economy, that will end up translating to political influence, and they will intervene. It does not matter which one. So I really want people to understand that and take this away and realize that it's just, it's a pipe dream, right? There is no such thing as a free market. Now, once we step away from that, then we can go and discuss, okay, well, how do we better organize this so that, it benefits the average person as opposed to just the people that are owning hedge funds at Wall Street. And I think the simple answer that most people will lean towards is going to be that regulation. But that's a topic for another video as far as what to do, what is to be done there. But yeah. And so anyway, with that long preamble, what I want to say is that not only have hedge funds stopped this, then on top of that, we have, I know it's been popular for people to like blame the media and stuff like that. But yeah, in this scenario, it is a real big issue when you have media that is complicit in this, because what immediately happened is that then you had financial media coming out and essentially trying to blame Wallstreetbets for this, saying that these individual retail investors are who caused the problem. And yeah, that's messed up. Like, so let's just look real quick here. This is from CNBC, and this is a guy who, by the way, he got caught doing insider trading like in 2016. So just so we're clear, before you have a basic picture of who this man is before he speaks.
The reason the market is doing what it's doing is people are sitting at home getting the checks from the government, okay? And this fair share is a bullshit concept. It's just a way of attacking wealthy people, and I think it's inappropriate. We all got to work together and pull together. The reason the market is doing.
So let's understand something really quick. This guy right here, first of all, like I said, he is not a person that is on your or my side at all. His class interests do not align with us whatsoever, and nor even the people on Wallstreetbets, just so we're clear. And here's the thing. That's the point, right? That's literally what the goal here is. This is not a surprising thing. This is not something that should be unexpected. This is a feature of the system that we live under. People will use their economic power, i.e., capital, to do what is in their best interest, which inherently ends up screwing regular people. And that means whether they're doing insider trading so that they can make money and take money from you, whether it's this specific situation where they're going to try and blame retail investors for them being irresponsible and having risky investments. That is a problem. And financial media, this specifically CNBC, I want to be clear, but financial media in general has been a real problem. Even like CNN, since, just so we're being fair here, CNN then, of course, came out talking about how this is, these Redditors, they have like these misogynistic things on here, and therefore, listen, that is an idealistic worldview. That does not matter. Yes, that is wrong, obviously. Okay, we don't want misogyny online. We don't want misogyny, period. Bad stuff. Yes. That has nothing to do with this situation, and it's nothing but a needless obfuscation from the reality that, just like in 2008, you have members in the financial community that are performing risky financial maneuvers in order to essentially not only take money, but also put people out of a job. They're trying to intentionally crash a retail business. That only hurts the average worker. So these people are absolute, scum. Like, this is terrible. And now here's an example where, this guy literally had to pay, what is this? How much is this? Yeah, this guy had to pay what is that? 1.7. So that's what, 2.4, 3.4 plus, this 3.8. So about $5 million in sanctions for insider trading just 4 years ago. And this piece of shit is trying to talk about how, poor retail investors, exploiting him with his pants down are a problem. Give me a break. And that's the point, is, again, he is interfering. He wants to interfere in the market. He did interfere in the market within. He wants to interfere in the market now, even if it's through, manufactured consent on media platforms. They are complicit. And that is the point. This is a huge issue, and this is something we cannot forget about. And yeah, it's something we really need to understand. And hopefully people will realize that this is literally how capitalism is designed to work. The people who have the most capital or the most assets are the ones that have control. That is the way the system works. And so I want to really step away by saying, cheers to the comrades at Wallstreetbets, with those diamond hands. I'm holding as well because, on principle, might as well. And no matter what, be critical of the media that you see. Be critical of what people tell you. Definitely do not follow other people's investment advice. Understand that I don't even care if someone is. I am not a financial advisor, and this is not financial advice. Even if someone is, you should still be questioning and making sure that you understand what risks you are assuming. So don't jump into this. I highly suggest you do not jump into this situation, but definitely read into it. And if you do the due diligence, then definitely look into it. And then also, I really want to stress that, go watch Louis Rossman's videos. He's a guy who does really good stuff, and especially around this topic. And then also, if you're someone who is like Louis and tends to be like a ardent arguer for libertarian free market values, I really want you to go and look and go online and look up, chapter 3 of Imperialism, the Last Stage of Capitalism. And I think you will be shocked at how much you actually agree with, people that you are told that you shouldn't agree with. And I think that when we understand that we let go of the idealism of believing that, power will not, step in whenever necessary in order to maintain power, then I think we can move forward to a material understanding of the world. and figure out what is the next step that we need to take and how do we fix these problems, you know? And so, yeah, pretty cool stuff, guys. And thank you, Wall Street Bets, for showing why free markets cannot exist. If you enjoyed this clip, be sure to leave a like, subscribe, and check out the full live version of the Wealth for 99 podcast, where we talk finance, economics, and public policy from a working class perspective. We'll see you there.